It's all over the news. The price of 1 ounce of gold is over $4,000 US.
Price of gold
closing above $4,000,
reaching heights it has never seen.
Millions of people and even some governments consider gold to be an investment. And you know what? Good for them. Ever since I became interested in investing, I have always dismissed the idea of owning gold. And I still haven't changed my mind. But I must admit it, the gold bugs are having a good time right now. As of today, October 17th, gold trades at $4,250. That is a 59% increase from 1 year ago when it was at $2,690. So congratulations to all gold bugs, especially to my friend Michael, who for the past 10 years has been asking me to buy some gold. It's been an amazing run. If you have put money into gold at the beginning of the millennium, in January of the year 2000, you will have ended up with more money than if you have invested the same amount of money in the Standard & Poor's 500. A lot more money, about 3 times as much, as you can see from this graph. And remember, the S&P 500 represents real businesses, companies producing goods and services, generating profits, paying dividends, and giving you a claim on future cash flows that are much larger today than 25 years ago. Gold, on the other hand, as British economist John Maynard Keynes puts it, is a barbaric relic. It produces nothing, it just looks shiny. Yes, it has some industrial use in electronics, and millions of people love it to use it as jewelry. But economically speaking, it's just a shiny object. So how does this shiny object, which does nothing except to sparkle, outperform one of the greatest bull markets in the US history? It just boggles my mind. I would like to tell you why I prefer stocks. The reason is simple. I prefer stocks over gold because stocks or companies produce cash flows. When you own a productive asset like a company, like a stock, it earns profits. Then those profits are reinvented and they grow and they pay dividends and they buy shares. And your slice of the economic pie continue expanding, even while you sleep. The compounding effect is relentless. It's like planting a tree in your backyard that keeps on giving you fruits year after year. Gold, on the other hand, it just sits there. It doesn't grow, it doesn't reproduce, it doesn't innovate. You are entirely dependent on the next buyer being willing to pay more for it than you did. And that is not investing, that is speculation. I admit it, gold does have some legitimate purposes. It does serve as insurance against currency collapses or geopolitical disaster. Imagine for a second that you live in a country with high inflation, like Venezuela. If you have gold, you just don't care that the local currency, which is the Bolivar, collapses. You are good, you have gold. One of the possible reasons for gold's recent rise is that central banks, many of them have been buying gold as part of their foreign exchange reserve. Traditionally, they buy US dollars, but some of them are switching to gold because their relationship with the United States has been deteriorating. The Chinese central bank is one of the biggest buyers of gold right now. I suspect that is because of the economic war they are having with the United States. So they rather diversify away from the dollar and into gold. Similar with Russia's central bank, they are trying to reduce the exposure to US sanctions and geopolitical risk. Another factor is accessibility. It has never been easier to invest in gold. In the past, you had to buy a physical coin from God knows where and then store it under your mattress or in a safety deposit box at your local bank. But today, you can just go to your laptop, log in into your broker's account, make a few clicks on your computer, and voila, you have gold. People buy gold in the form of ETF, and the most popular ETF are GLD or IAU. That's because they are liquid and they just trade like stocks. Anyone can buy gold or sell it in a few seconds. So after all this, have I changed my mind? Not at all. Gold is still a shiny metal with no cash flow. Its value doesn't depend on future earnings. You know why? Because there are none. The price is driven 100% by sentiment. Call it animal spirit, call it faith. I prefer to call it the greater fool theory. How about you? Do you think the price of gold is justified? Should it go higher? Should it go lower? Let me know in the comments below. But before you go, don't forget to sign up for our newsletter at alenguillot.com/newsletter so that you will never miss an episode. Thank you so much for watching, and until next time, peace.